In your own local neighborhoods, you'll have this and you'll see the opportunity. You'll be able to do something with it. This is a libertarian dream. So this is how real estate used to happen, is you would grow old in a house and then you would own or finance it to somebody else once it was paid off, before the government took off over mortgages. The house I was born in, there was high interest rates, but my parents did an owner finance deal with the owner. I think market interest rates were 14. They took an owner finance deal at 10. This used to happen in the 80s all the time, and it's going to happen again. This is what you do with sellers who are not desperate, who have a ton of equity in their house. So we're talking the opposite extreme now. So remember, price does not equal value. How do we define wealth again? The ability to trade real assets for what we want and need. And then how do we define value? What you can do with an asset. So keep those in mind as we go through this deal. It'll make more sense. Okay, owner financing for the 4 components of the deal. In an owner finance deal, once again, the creative buyer owns the house. Once again, the creative buyer is on the deed and the title. Now, where this is changed, things change, is now, who can guess who's on the deed of trust on this deal? The previous seller. Because he doesn't own a house anymore. They now owns paper. He went from a real economy asset to a paper asset. And then the note, the owner knows, is now the lender. So the note's between you and the previous seller. Make sense on the 4 components? Okay, so the advantage for the seller is, this is going to be huge coming up. The seller does not have to do an immediate capital gain. Most of these are tired landlords. They're sophisticated people. They only got into real estate to avoid taxes. They want to keep avoiding taxes. So they still get monthly cash flow, but they don't have to deal with tenants, maintenance, or make ready. And then right now, with interest rates so high, they don't have to find another deal to put the cash, their capital gains in. Makes sense why a seller would want this right now. That's why these are popping up again. For the buyer, you get flexible and creative terms. You get non-recourse debt. This is not on your credit report. This is not part of your golden tickets. You generally get lower than market interest rates. You get easier underwriting. You want to know why it's easier underwriting? Because you're the underwriter. So you don't have to deal with third-party banks. And once again, it's non-recourse. That's huge. Disadvantage, the seller doesn't get their entire cash up front. That kind of stinks. But for most of these people, they're already wealthy. They don't need the cash. For the buyer, these type of deals are a little harder to find. But people like Luke, people like my team, they're like Liam Neeson on Taken.
I can tell you I don't have money, but what I do have are a very particular set of skills. I will find you.
We're going to find you. Price versus value. We just went over this. In creative deals, price isn't irrelevant, but it's not as important as value. Does that make sense? You can overpay. You can do whatever you want. This is the Wild West here. It's fun. All right. So Luke actually, could you make an argument? He overpaid. So I'm just going to blitz through these. Yep. So right now he's going to do a rent raise from $975 to $1,200. He's going to hook up with traveling nurses, and then he's turning a $475 property into $1 million property. Let's look at his core 4. What's the value for Luke? Because he's willing to trade his time. It's $500,000 in equity when it's done. Instant, just to let you know about this today, instant tax savings because he's a real estate professional, $50,000. He's going to be cash flowing 8% a month at 0% interest. So if your thoughts are there's no good deals out there, you're wrong. It's just coming. This is why I'm so bullish right now. So using the whole deal, you got to, before it's just cash price, ARV of the house, rehab. It was 3 numbers. But this stuff, it's different. You got to know more. You got to know market price, current condition, current equity, the note, the interest rate, the monthly payment. These are all the negotiating points. You got to have the monthly rent, the rehab cost, the buyer. You got to have an interesting party. You got to know the investor state of mind, what they really want, and you got to know their desired end state of what they want, what they value, not the price.
Let me add this really quick. I said this yesterday. The way you're not going to get a seller finance deal is saying, hey, Jimmy, would you consider seller financing that to me? That's not, It's not going to work. And I can talk to people afterwards because I know you don't have time for questions.
Yeah, so it's finding out what's valuable to them and giving it to them. I don't know you'd be interested, but I can give you 0% interest and get you $10,000 and pay your mortgage. Like what they want is their mortgage paid, and they wanted $5,000. So the $1 million question, what is the value to the seller? This is very in line with cash flow tactics, creating value. You have to get to know the person. You have to figure out what's important to them. But the key to this is what's valuable to the seller, and price does not equal value. So steps to creating part of the creative deal, identify the parts of the deal, identify the leverage points. Leverage point was $5,000 down payment. So the 5 core function of creative: deal flow, relationships with someone with deal flow, like myself. 7 touch points of a seller, deal structure, negotiate, closer. And I really believe in the future, these type of deals are gonna be coming up in your neighborhood, and you wanna be able to do something with them.